Hey everyone, and welcome. Let's just jump right into it. If you've got this feeling that the financial ground is just constantly shifting under your feet, well, you are definitely not alone. It seems like markets everywhere, stocks, crypto, you name it, are making these really sharp, really unsettling moves. So let's try and make some sense of all this chaos together.
And that's not an exaggeration. That feeling of instability, it's pretty much the new normal. We're seeing this collective shudder run through almost every type of investment, which tells you that something really fundamental is changing.
And look, this isn't just one market having a bad day. We're talking about major, simultaneous drops right across the board. The Nikkei in Tokyo, silver, even Bitcoin, all tumbling down together. And when you see everything fall in lockstep like this, it's a huge red flag that what we're dealing with is a deep, synchronized global fear.
Okay, before we get any deeper into the analysis, just a real quick reminder, if you're finding this breakdown useful, please don't forget to subscribe, turn on those notifications, and share it. And as always, remember this is all for informational purposes, it is not investment advice. Thank you!
So to really understand why everything is shaking, we have to zoom out. Let's take a look at the incredible pressure that's building up inside what is essentially a global economic pressure cooker. Right now, every major player is kind of caught in their own trap. You've got Japan. They want to stimulate their economy, but if they dare raise interest rates, the whole global carry trade, which relies on their cheap money, could just evaporate and trigger a crash. Then, you've got the US, wrestling with the Fed and a mountain of debt. And over in China, they're tightening their grip on the raw materials the whole world needs. Basically, everyone is cornered. And speaking of that mountain of debt, get a load of this number. The U.S. national debt went up by $620 billion while the government was supposedly shut down. I mean, that just perfectly captures how unsustainable this whole thing is. And it's making investors seriously question whether U.S. bonds are really the safest asset in the world anymore.
So what's the big takeaway here? With every major economy facing these impossible choices, they all reach for the same short-term solution. They turn on the printing presses. From Tokyo to Washington, central banks are just creating more and more money, which pretty much guarantees that persistent inflation is here to stay.
All right, so with all this newly printed money flooding the system, and with old safe havens looking pretty shaky, the huge question is, where does all that capital actually go? Let's break down how different assets are behaving in this completely new reality.
Now, this is a fascinating comparison. You have Warren Buffett, an absolute legend, right? He chose U.S. Treasury bonds, which were projected to give him maybe 5 to 10% over 2 years. The source for our explainer today, on the other hand, went with gold, and their return in that same time frame, almost 100%. Wow, that's a huge difference, and it shows you how the old rules of what's safe might be completely changing.
Then you've got gold's, let's call it its volatile cousin, silver. As the source says so perfectly, it is not for the faint of heart. It moves way more dramatically than gold, mostly because its price is tied so tightly to what's happening in industry. Because of that risk, the speaker suggests a more conservative approach if you want to get in on it, maybe 80% gold and 20% silver just to manage that wild ride.
And what about Bitcoin, the so-called digital gold? Well, the data here is pretty darn clear. Its price moves have a staggering 92% correlation with the NASDAQ Tech Index. So, when tech stocks go down, Bitcoin goes down. This really challenges that whole idea that it's some kind of independent safe haven. Really, it's just been behaving like another high-risk tech stock.
Now let's talk about a classic, real estate. In a world full of inflation, real estate becomes something called a leveraged inflation hedge. It works like this. You use a loan, leverage, to buy a property. Then, as inflation goes up, the dollar value of your property also goes up. But here's the magic part. The real value of the money you owe on your loan actually goes down. As our source points out, with that kind of leverage, even 10% inflation can feel like a 40% gain. It's powerful stuff.
Okay, so we've looked at what different assets are doing, but that's really only half the story. The other half is all about how you approach making money. And that comes down entirely to how much time and effort you're actually willing to put in.
Just think of it like a spectrum. On one end, you have fully active income. That's like running an e-commerce store where you're doing everything yourself. In the middle, you have semi-passive income, like managing a rental property. Yeah, you've got to find tenants and fix things, but it's not a 9-to-5 job. And then, way on the other end, is fully passive income. That's where you put your money into a fund or a trust, and you just let other people do all the work for you.
And all of this brings us to the final and honestly the most crucial part of the entire puzzle, because it's not about finding the one best investment. It's about building a personal blueprint that actually fits your life, your age, and what you're ultimately trying to achieve.
The source shares this really powerful piece of wisdom, and it highlights a critical shift that has to happen in every single investor's life. The goal changes. When you're young, it's all about aggressive growth and taking big adventures. But as you get older, the focus has to shift to preserving what you have and just enjoying it.
This all boils down to this really unique and profound concept our source calls the shroud deadline. This has nothing to do with market cycles or Wall Street. This is about your personal timeline, the one defined by your own lifespan. It forces you to ask the most important questions of all. What do I need this money for, and when do I need it by? The answer is different for every single one of us, and it should be the foundation of your entire strategy.
So, as we wrap this up, the final takeaway isn't really about gold or Bitcoin or real estate. It's about you. In a world that's constantly shaking, the only truly solid ground is a plan that's built around your own life. So what are you investing for, and what is your shroud deadline?